The Perplexity founders are very savvy. They understand that Google right now is facing tremendous regulatory and policy oversight. Chrome is the crown jewel. Perplexity is here, valuation $18.5 billion, and they've offered $34.5 billion. Guess what? Investors are stumbling over each other to say, we will fund you. Hi everyone, this is Ali Hussein Kasim of Ali Talks Tech. In this week's weekly roundup, we're covering 5 stories. The first one is an interesting white paper by Quidax, I think that's how it's pronounced, Quidax and TechCabal on the rise of OTC and stablecoins. OTC, that's over the counter, and stablecoins. We're looking at how this space is evolving. Then we will jump into a regulatory update in Kenya's credit market by the Central Bank of Kenya. Also look at the ongoing saga of AFRINIC, and I have a radical suggestion which has elicited quite interesting conversations on my LinkedIn page, and I will read some of the comments. Then I will speak to an interesting startup in Kenya's interesting startup called DigiTax, which is expanding into Nigeria's digital tax ecosystem. I love this sort of stories. DigiTax is interesting, in my opinion. For many, it may look like one of these things that people kind of, when you see it, you're like, why didn't I think about it? But it's also not one of your exciting fintechs. This is a space which can be called boring, tax, compliance stuff, but they have made work so easy in this space. So we'll look at that. Lastly, I want to talk about Perplexity's bold $34.5 billion unsolicited bid for Google Chrome. Obviously, even as they're putting this bid, they know that, Google will tell them, you guys go shove it where it doesn't shine. Seriously though, this is an interesting paradigm that is starting to happen in the browser ecosystem. I've taken a deep dive on this subject today in my weekly newsletter. Please search the newsletter. I've done a deep dive on this. You want to start understanding how AI is starting to change the whole conversation and the whole business models around browsers and search and the whole internet ecosystem. So let's take a deep dive on the stablecoin revolution that is starting to happen in Africa. I want to just take a step back a bit. For those who've been using stablecoins for years, they must really be wondering what the hell is going on now. Everyone and his grandmother and father is now stablecoin expert. They're all dealing with USDTs and USDCs and sijui what other stablecoins. So let's step back one bit and let's look at what exactly is a stablecoin. Stablecoin is a cryptocurrency which has a value that is pegged or tied to that of another currency, commodity, or financial instrument. So let me repeat that. A stablecoin is a cryptocurrency which has a value that is pegged or tied to that of another currency, commodity, or financial instrument. So let's take two of the most common stablecoins, USDT and USDC. Both are pegged 1-to-1 on the dollar. So if I have one USDT, you can actually say I have $1. I can exchange that USDT and get a dollar in return. So what's the hullabaloo around this? I mean, why not just use a dollar? It's all about how efficient this money moves. You know, if you want to move dollars from your bank account to another bank account, you probably have to call your treasury manager, negotiate a rate. You know, by the time it takes probably at best, that takes about an hour. With stablecoins, you can go onto a number of these cryptocurrency exchanges and you can see trades, different traders, and you can receive money within minutes without having to pick up the phone and talk to anybody. That's the huge difference. The ability to move huge amounts of money at velocity and at speeds that were not imaginable before, and at rates that are super competitive. This is why we are starting to see the rise of stablecoins. Now, this white paper says, and let me read specific statistics on this white paper. Stablecoins now represent 43% of all crypto transactions in Africa. Nigeria leads with over 20 billion in stablecoin inflows, making up 40% of the region's regional total. However, this is interesting because as Nigeria leads, the Securities and Exchange Commission has raised a red flag a couple of days ago and started talking about how $2.5 billion worth of stablecoins have moved without policymakers and regulators understanding where this money is. That's an euphemism for possible anti-money laundering conversations. Ethiopia's stablecoin usage has grown an astonishing 180% year over year. Global over-the-counter crypto volume surged 106% in 2024, driven largely, wait for it, by African markets. So, for business leaders, stablecoins are starting to revolutionize payments, and you're starting to speak to the fact that you can move volumes at speed. Now, there are obvious issues around regulation, around whether some of these exchanges are regulated. I can tell you that policymakers and regulators are catching up. They're catching up, and you already have certain exchanges across the continent that are already regulated and registered by regulators in Nigeria, in South Africa, Kenya. We are just about to pass the crypto bill. So we are going to start seeing super interesting conversations. Now, let me speak to the next subject, the next conversation, which is a regulatory update in Kenya's credit market. I think it will be interesting to take sort of a journey down memory lane in this credit market, or digital credit providers, or DCPs, or whatever people want to call them. In 2021, the Central Bank of Kenya Act was amended to bring previously unregulated digital credit providers under official oversight. So that's 2021. That's about 4 years ago. In 2022, the central bank issued the first DCP regulations, directly tackling high loan costs and ethical collections, directly tackling high loan costs, unethical collections, and personal data abuse. This led to the licensing of 126 digital credit providers. In 2024, the Business Laws Amendment Act widened the regulatory framework, replacing digital with non-deposit taking to clarify and cover a broader range of credit providers. So let's stop there first and appreciate that statement. Initially, you had a differentiation between digital credit providers, those who use apps and stuff. Now, it is encompassing everyone who is engaging in financial services, whether they are digital or not. This is interesting because Initially, you have a number of sectors within financial services in Kenya. So let's try and break those down. You have the banks, which are the top tier. But even with banks, you have tier 1 banks, you have tier 2 banks, you have tier 3 banks, and you have tier 4 banks. Then you have microfinance institutions. So these microfinance institutions are broken into two: deposit-taking microfinance institutions. These ones are basically, for lack of another word, smaller banks. They can take deposits, but they have a limit, and their prudential rules are sort of different from the larger banks. Then you have, so these deposit-taking microfinance companies can take deposits from their customers, and then they can do all sorts of transactions within that. Now, there are few of these deposit-taking microfinance institutions like Choice Bank, Branch, Faulu, who now also have access to the national payment system. Then you have non-deposit taking microfinance companies. These ones are finance houses that can give you loans, but they cannot take deposits. Then you have SACCOs, and SACCOs have an interesting structure because these are owned by the members. And you have SACCOs who take money from their members, but they're not called deposit. They are basically shares. But based on those shares you have, you can take loans and stuff like that. Then you have chamas. These are informal groups of people that come together and collect money. We've seen some of the chamas turn into large holding companies. So that's the sort of landscape financial services in the financial services sector in Kenya. What these new rules simply say is that whether you are a digital credit provider, which is non-deposit taking, or non-digital, you are now all called, what's the word? Let me look for it again. Non-deposit taking credit providers. So last week, the Central Bank of Kenya published a draft non-deposit taking credit providers regulations, or NDTPC, and is actively seeking industry comments until September 5th. Quite interesting. We are entering an interesting area because I recall almost 3 years ago, I was asked in an event, what are the things that you see will be transformational when it comes to the fintech ecosystem and financial services across Africa? What are those things that would be investors, founders, and ecosystem players need to be looked? For me, one of the most interesting and one of the most key things I said then was that founders need to be super savvy when it comes to policy and regulatory matters. And that, on the back of that, actually is why we founded the Association of Fintechs in Kenya. Interesting times. My next story is on the ongoing AFRINIC debacle in Mauritius. Now, AFRINIC, for lack of a very simple, very simply, AFRINIC is the regional internet registry for Africa. It is the organization that issues IP addresses. Without IP addresses, you have no internet. This organization has been embroiled for the last couple of years in lawsuits. One particular organization has decided that it wanted to cripple AFRINIC because they awarded whatever word you want to use, but they have control of a block of IP addresses, which the then management and board said, no, we need to review this. Since then, AFRINIC has simply been crippled. 50 lawsuits from one organization. For me, I've followed this almost from the beginning as an interested party, as an African, as a leader in the tech ecosystem. And finally, I'm like, guys, maybe we need just need to campaign and get AFRINIC out of Mauritius. It seems like the Mauritian government is almost toothless in dealing with the issues that are being faced by AFRINIC. But there have been lots of pros and cons and conversations. So let me read you a poll that I did on LinkedIn. That was over the weekend. Let me put it this way. Without AFRINIC, you have no internet in Africa, unless you can find IP addresses somewhere else. That's the importance of AFRINIC. So after following this saga for so long, what I did on Saturday is I just simply said, your voice matters. AFRINIC's future location. As Africa's internet landscape continues to evolve and the shenanigans going on at AFRINIC, is it time to explore the question of whether AFRINIC should be headquartered, of where AFRINIC should be headquartered? I'm inviting our community of tech leaders, policymakers, and innovators to share their perspectives. As a passionate advocate for digital transformation and collaboration across the continent, I believe the location of such a pivotal organization can have a far-reaching impact on accessibility, policy, and innovation. Cast your vote and let's spark a conversation. What factors do you think should guide this decision? Ecosystem maturity, government support, infrastructure, or something else? Share your thoughts and tag leaders who should be part of this conversation. Well, I created 4 choices: South Africa, Kenya, Ghana, and Senegal. And immediately, Nigers were up in arms asking why did I not choose Niger? And I simply asked somebody should maybe start their own poll. Okay, tongue in cheek, of course. But the comments, I invite you to read, to go through this and have your say. It is super, super important that Africa starts controlling its resources. We don't want the same sort of situation that is happening with our natural resources that are going to start happening with our digital resources. We have to put a stop to it. So what are the key factors that would make a new home for AFRINIC become more attractive? In my opinion, ecosystem maturity, government support, infrastructure, accessibility and inclusivity, stability and security. Guys, have your voice. Please engage in this conversation. This is super critical for Kenya, for Africa's digital economy. My next story is on Kenya's DigiTax expands into Nigeria's digital tax ecosystem. This startup is making significant progress. Basically, DigiTax simply integrates into a country's digital tax ecosystem, making it easy to comply with tax authorities. In Kenya, it's already widely accepted and it's used by many organizations. In Zambia, and now it has gotten approval to get integrated into Nigeria's tax ecosystem. This is crucial as governments across the continent are beginning to appreciate and understand compliance and tax is an integral part of growing the countries, African countries, and starting to wean ourselves from the vicious cycle of getting loans from outside, getting donations, donor funding, and stuff like that. So, DigiTax founders, keep up the good work. It is an integral part of the digital economy. My last story today, which as I said, I've done a deep dive on Perplexity's bold bid for Google. My sense will be that this is sort of a PR stunt, but the Perplexity founders are very savvy. They understand that Google right now is facing tremendous regulatory and policy oversight. Their crown jewel, Chrome, is potentially turning to be an Achilles heel. And Perplexity is here, valuation $18.5 billion, and they've offered $34.5 billion. guess what? Investors are stumbling over each other to say, we will fund you if the bid is successful. Now, the Justice Department has some remedial actions that they have proposed, and one of them is the divestiture of Chrome, which is the leading browser in the world today with about 64%. Guys, you want to understand the impact of this and the fact that Chrome is the crown jewel. It is the collector of 20 different data sets. Now, if you want to take into consideration of what this means, other browsers are doing like 6 different data sets. The whole sales system that is the advertising ecosystem that runs Google is embedded into this browser. Your guess is as good as mine whether Google will actually sell this. But it is interesting that this startup called Perplexity, it's an AI learning engine, as they call it themselves, is bold enough to say, this is for sale, we will take it. And as they talk about this, they've launched their own browser called Comet. What's also interesting is that a lot of the browsers today that you see, if not all of them, are based on the Chromium open source platform that Chrome is built on. So whichever way you want to look at this, the asset, the intangible asset that is Chrome is so crucial that an upstart with some very deep pockets, investors who are willing to say, if you are successful in this, we will ensure that you have the money to buy it. We're seeing in an interesting stage that we have reached. I call it Browser Wars 3.1. The first Browser Wars, for those who may not be as old as myself with white hairs, and you have not been a student of business history like I am, the first browser war was against between two proponents, two players. Netscape, a founder that started the first most popular browser, because there were others before Netscape. Microsoft had missed the boat, and they came crushing this Netscape player. Within a couple of years of Microsoft launching Explorer, they had completely finished Netscape. These guys went to court. They accused Microsoft of anti-competitive behavior, and Microsoft almost got broken apart. Fast forward to today, we then moved into Browser Wars 2.0, where you had Firefox, you had Internet Explorer, and you had Google Chrome. We all know who the winner is, Google. Now, Google is in the space where Microsoft was before. It is very instructive to appreciate and understand that without that intervention by policymakers and regulators, Microsoft will probably still be dominant in the browser ecosystem and will probably not have seen all these innovations around the internet ecosystem that we have seen happening so fast. And so, every day you wake up, something new is happening. Now, Browser Wars 3.0 has something into the ingredient, and that's artificial intelligence. And guess what? AI feeds on data. Loads and loads and loads of data. And where is this data? It's sitting within the Google ecosystem. Now you can see why startups like Perplexity are starting to say, wait a minute, if the Justice Department succeeds in breaking up Google, or rather forcing Google to divest from Chrome, they're ready to jump in. Having said that, OpenAI, the makers of ChatGPT, are also about to launch their own browser. So guys, buckle up, soda in hand, popcorns on the other, and let's watch this unveil. It's going to be super interesting. Thank you, guys. Looking forward to speaking with you next week. But I urge you to go onto my newsletter, subscribe, of course, and read an in-depth story on the browser wars 3.0. Asanteni sana.